after the assessment is over, we have got an information, or valid information from the VAT department saying that there are some certain bills which are suspicious, certain purchases are suspicious purchases. Now, is it not permitted for me as a curative measure, which is given to me by the power of the Section 263, being a curative measure, can I not trace into the Section 263? Because the record which is as of today before me is consisting of those information as well.
The record, you can see that.
No, that is relevant, Your Honor. Why? Because this is a clear-cut information coming from the VAT department. And just to support Your Honor, you may please refer to one decision of Supreme Court in CIT versus Manjunatheshwar packaging products 231 IDR 53. Here was a case where a valuation report was received by the department after the end of the assessment year, and on the basis of which the CIT has resorted to 263 and the Supreme Court has approved it. Coming to the facts of the case, we have received the information from the VAT department, and therefore the same analogy will apply which has applied in this 231 IDR Supreme Court, and therefore we should be permitted at least to look into the exam. That is the first aspect. That is the first aspect. Lack of inquiry will also include the inquiry which should have been made. Now he is finding should have been made. Though explanation 2, we are on the point whether it is retrospective or prospective. That is a separate issue altogether. Of course, to my support, I have got the decision of complaint reviews Mumbai Tribunal, where it has been said that it is clarificatory in nature and amendment which should be seen as a retrospective amendment. Even if we don't accept that proposition for the time being, for the purpose of our discussion, even then, the inquiry should be something which the normal assessing officer will make. And in a case where
you don't rely on the problem.
I rely on that. I rely on that proposition, but at the same time, even DHOR's explanation 2, I am saying that even DHOR's explanation 2, the inquiry should have been not restricted only to the copies of the bills and the payment. Copies of bills and payment is not sufficient to discharge the
Who
bill.
will decide what inquiries, how much, what inquiries should have been made by you? CIT has to decide how much inquiry you should have made.
No, that I know, but then at least some confirmations. Out of at least selective basis, at least 4 or 5 ledgers should have been called for.
Depends on case by case. How can you state it formula?
That is what I would. Normally, it has been the practice here. This is the practice where some of the purchases are at least cross-verified. Here, nothing has been cross-verified. Only filing of bills and payment will not be completion by that itself. That is one aspect of the matter. As regards the second aspect of the matter about share premium, here there was a pointer. The assessing officer has made a error. There was a clear-cut pointer available to the assessing officer in saying that the shares premium is 190 as against the share face value being 10, and 200 rupees has been charged as a share premium. Now, was it not a pointer to the assessing officer to come to a conclusion that yes, some further inquiry is required? Mere confirmation letter is not sufficient here. And by the time the assessing officer made this assessment, he should have at least inquired further whether the assessor's own money is coming. And if he is making those mistakes in not making the inquiry, but then relying on the decision of the Supreme Court in Amitabh Bachchan's case also, and also in the case of the Shudlakshmi is directly covered in the favor, where the same issue is very shared premium, where the Calcutta Tribunal said that the revision at least is permissible. On merits, there may be a different case, I am not on that as of today. So on merits, yes, but on Section 263, the invoking power of Section 263 is certainly valid. There was a reason for the AO to investigate, it did not investigate.
In your case, commission is giving direction to make addition. He is not asking people for further inquiries.
Well, to that extent, yes, maybe the honorable bench may give a direction that, okay, the commissioner's direction may not be, but at least the assessment is to be made with due inquiries. If the bench gives that type of direction, we will probably accept that.
Only one small revision under only one point. Because the commissioner has given a direction, make the addition. My humble submission, it's my appeal. So the direction, what we have to see is whether that direction is valid or not. And it is not it's not before the tribunal to decide whether the direction can be modified or not. So it has to be wholly. Alright.
Case 4.
Yeah.
Income tax is the tax of real income. Profits are derived out of commercial principles having regard to business character of transactions and reality in specificity of situations cannot be determining. Reality of business situations will determine what should be taxed, and it should not be taken purely on theoretical or legalistic approach. Your Honor, I would have said that where accounts are followed on mercantile system, what has to be seen that income has really been accrued to the SSC or not, and real income theory should be looked into. In this regard, I would rely on the judgment of Goza electricity of Supreme Court. Second issue, what I will say, that when income accrues, it becomes due.
But the facts are clear that is the interest was backed by a guarantee from the holding company. Holding company
Actually, the loan was guaranteed and not the interest, but what is saying that loan was guaranteed by the holding company.
does that interest, if the interest is not paid, you mean to say that interest is not guaranteed, only the loan amount will be guaranteed. Would that loan not
Yes.
become a part of it? Interest would not become a part of that loan afterwards? In the subsequent year?
Your Honor will appreciate that in a given situation, in spite of this interest which was payable every month and which has not been paid for the entire year, and even thereafter till 6 months when the new settlement came out. So for 18 months the interest has not come. In spite of holding company being there, in spite of the approvals being guarantee being there, interest has not come. And interest is still not received. And because interest was not received, it was resettled. And the SEC had no choice but to resettle, to recover the money. And the resettlement was that after a period of 3 years, the bullet payment should be paid. So, in spite of there being guarantee, the money has not come. The other thing what I would like to say that the income accrues, but it must be accompanied by corresponding liability of the other party. In the given situation, when there is the resettlement, there is no liability of the other party to pay. The liability, as per the resettlement understanding, will accrue only after completion of 3 years. And in this regard, I would rely on CIT Excel Industries, CIT versus Excel Industries Supreme Court judgment. Your Honor, I would also rely on the judgment of E.D. Sasu case, wherein Supreme Court has held that in order that income can be said to have accrued to or earned by SSC, it is not only necessary that the SSC must have contributed to its accruing or arising by rendering services or otherwise, but he must have created a debt in his favor. The debt must have come into existence and he must have acquired a right to receive. Since in the given situation there is no right to receive.
Yeah, we are aware about the facts. If you could only briefly explain your arguments.
The other situation would be that even though there is accounting entry done by the borrower, but still that is hypothetical. The accounting entry has no relevance in the sense, as per the understanding, the interest is payable at the end of 3 years in a bullet payment. Your Honor, you will appreciate that these days there are lot many, because of economic situations, lot many NPAs are happening. And in case of restructured NPAs, only when the new conditions are fulfilled, then only interest is accounted for or income is taken into account.
When was this restructure done? When was this loan restructured?
It was done in before in the month of August.
Before the filing of the return of the income?
Before filing of the
Okay.
before closure of accounts also. Before closure of accounts, before signing of the audit accounts also.
No, that's not.
Before filing of the returns.
Before the filing of the return, not before the closure of the accounts. Yeah, in the month of August,
August.
before filing the return, not before the accounts are finalized, the accounts would have been finalized.
No, accounts were finalized in the month of September, not in August.
That is the due date of the filing of the return of income. We are now discussing whether the restructuring was done before the accounts were finalized or before or after the accounts are finalized but before the return of income is filed.
Actually, the audit, this accounts, AGM, etc., this all happened in the month of September. So accounts were not finalized till the time it was happened.
No, first of all, we do
Both
not
things happened.
I agree to that. The accounts cannot be finalized or will not have been finalized in the month of
What
September.
happened?
Okay, okay.
So in restructuring situation, another thing what I would like to say that accounting standard 145.2 notified in 1996. So accounting standard 1, which is on disclosure accounting policies, specifies for prudence, substance and materiality. So in this case, in the given situation, since I know that interest is not coming, interest has not come for the entire year, as a prudence policy, I would not consider that income for that particular year. Only after 3 years when I am supposed to receive that money in the period, in that year I would prefer to take this income.
But what ICDS very clearly says that in the proportion of the time you are supposed to account the interest income, as far as the interest
The ICDS
and
says-
royalties are there very clear.
ICDS says when I will account
So
for the
you agree to that the provision of ICDS will apply?
ICDS will apply, I agree with you, Your Honor.
Then
Only
how
thing what I
it is?
would like to say that ICDS says that if interest is to be accounted for, it has to be accounted for on proportionate basis. But in the given situation, interest is not accrued. So there is no question of beginning of the formula. If I were to consider interest, then I would have considered proportionate basis. But in the given situation, interest is not accrued at all. It will be accrued only at the end of 3 years.
Okay, on the MAT provision you have something?
MAT provision would not apply because ICDS is a computation formula. So MAT provision would not apply because ICDS is just a mechanism to compute the income. So there is no question of changing my books of account. Accounting standards do not, my books of accounts, my balance sheets, etc. would not consider ICDS. ICDS is a mechanism which I will do only for the purpose of computing my income taxable for filing the return. As such, it will not apply for government budget.
Okay, okay. That's all?
Yes. Thank you.
You have anything to say still? You're done. Okay.
Your Honours, my learned friend's argument will appreciate it at the facts and he has analyzed the facts correctly. Before I get into the actual argument, let me just point out specific pointers before this honourable bench that these facts play a very vital role as far as this aspect case is concerned. Fact number 1, this is a company which is having a main business of activity is manufacturing export of pharmaceutical product and as a supplementary business activity of lending money. So it's a part of the business of the assessee to lend the money. So obviously the interest income is arising out of business. That is first proposition. It is admittedly a fact that is a company registered the Companies Act. The Companies Act makes it mandatory to provide for to follow the mercantile system of the company. Number 2. Number 3, Section 145 mandates that if I am following a method of accounting vis-a-vis a business, either I have to follow mercantile or accrual, or cash, there is no other option available to me. And accordingly, I am following mercantile system. Having said all these things, whether there is any room further that assessee can have an option at his will that somebody is not paying some amount, that itself is a non-starter for not providing for that. Number 1. Number 2, and then this particular aspect has been very clearly categorizedly stated in State Bank of Tribunal, although in banking sector. But sticky loans, even they are referring sticky loans, and I am referring to that also because in my case there is no sticky loan. That is my first proposition. In State Bank of Tribunal, the larger view was that yes, it is not possible to say that when you are following mercantile system accounting, still you will bifurcate the interest accordingly. It was not permitted. Even you consider a commercial reality. That is what the majority will.
We have subjugable classes.
Yes, Your Honor. Now, in this particular aspect, if you look at this transaction, let me first take you through the facts further, which suggest that this particular company X Limited, who is just defaulted on the interest payment, it just defaulted on interest payment. There is no case at all, from my friend's perspective, that they are not in a position to pay.
Defaulted means they are not in a position.
I'm trying to explain that, Your Honor. A default will be attributable to many factors. A default of a person for not making the payment can be attributed to many factors. As far as the present case is concerned, those factors are not there before this honorable bench. It is only not defaulted. Now, let me point out another aspect. They have also gone for a restructuring.
Since they have gone for restructuring, we assume that that default is there and they have not made the payment.
What has happened in restructuring? Have they denied anything? The answer is no. They have simply deferred the payment. They said instead of this year, we'll pay after 3 years.
So when does your right to receive?
My right to receive, as per approval system, is since I am following mercantile system, has to accrue on the year in which I am supposed to receive this. This is
Yes,
point.
so when does it accrue?
It is accrued to me in the year in which I am entitled to receive this, because I am following mercantile system accounting, Your Honor. So it is accrued to me on that day. That is my first submission. Second submission, emphasis has been made on accounting standard. Now, accounting standard, if one refers AS9 to be precise, which refers to the concept of approval, where the concept has been emphasized that when there is no reasonable certainty. Now, in the given case, there is a fact that principal amount, absolutely there is no such doubt. Here it is backed up by the holding company who is having sufficient cash reserves. Your Honors have rightly pointed out that he is having sufficient cash reserves. So there is no question of any doubt on that principle. And if principle is not doubted, where is the certainty aspect is missing? It is not missing, Your Honor. It is definitely there. That is second part. Now coming to ICDS. My learned friend is not referring on ICDS, but ICDS plays a very vital role in this particular competition because this is a relevant assessment in 1670. As ICDS is applicable for assessment in 1670. Now, in that case, for assessment in 1780, in that case, ICDS, now there is a material change which has taken place. Like my arguments, all these are the department was not having any specific computation mechanism or computation standards for that matter, and now it has been there on statute. So for that purpose, probably we were relying on AS9. Now under AS9, the material difference which your honors must appreciate, under AS9, this accrual concept was defined after 3 limbs. One is the sale of stock, sale of goods, services and interest. And after these 3 limbs, this accrual concept was defined, so it was always understood as accrual will apply to all these 3 limbs. If you come to ICDS, your honor, ICDS has defined this particular accrual team only in connection with sale of goods. As far as other 2 limbs are concerned, that is services and interest, this accrual concept is not defined. So therefore, our case is that the moment you are following the system, you have to provide for interest and there is no alternative for the assessing to defer it. So in view of this, my humble submission, Your Honor, is that this entire interest has accrued to assessing and it is duty of the assessor to account for it.
ICDS will override section 145, section 4, section 5.
Your Honor, ICDS gives a computation mechanism. Law in its wisdom has recognized this concept of ICDS to remove these kind of confusions which are there. That is how I look at ICDS. Secondly, even the current law takes care of subsequent action. Assume a case for a moment. X is not in a position to pay in say second year or third year also. Law has taken care of that. Law has provided for the provisions of bad debts. Even if I pass accrual entry, law will allow me to ask for a bad debts. And if I receive it subsequently, yes, well, that is also can be taxed. That's not a confusion. There is no confusion at all. So, in my humble opinion, Your Honor, the action of the Assessing Officer is very much valid, and I support all the orders of authorities. Thank you. Obliged.
As regards your applicability of MAT provision?
MAT provision, I don't think there is much of the point to be said, because I will not really press that, because it is computation standard, and I believe that's not the.
All right.
Fair enough.
No, I'll just like to add for a minute. My learned friend says that there is no doubt about recovering the principal. The loan is 100 crore, monthly interest at the rate of 1% works out to be 1 crore. And my borrower has not been able to pay even 1 crore rupees for a consecutive period of 18 months. If he could not pay 1 crore rupees, you are saying 100 crore is not in doubt. I would not agree with that. Because he is not able to pay interest, the loan amount has become very much doubtful, it has become sticky. Second thing he said, that you pay the tax now. I don't earn any income. I don't earn any income. My friend says that I pay the tax now and I claim it bad debts in the next year.
We understand. You are relying on real income theory, whereas the learned DR wants to say that you have a mechanism to write it off the year in which it is decided that yes, you are not
It's
sure.
unnecessary burden on me.
We understand.
Thank you so much.
Case 5. Your Honor, Your Honor, at the outset, my apology, I am not in the proper dress. I am aware that I am not supposed to wear the pink shirt and it should be white shirt. But because today is Friday and I thought that today matter will not be there, but my office informs me that today matter
No
is
excuse. No such excuse. But we'll excuse otherwise anyway.
obliged you. Your Honor, in this case of capital gain, the issue is out of 8 crores I have received during the year only 2 crores of rupees. For this capital gain, so we have to.
Sometimes we are aware about, I think, we are about the facts.
So what section 45 says, Your Honor, is we should just see the section 45. Any profit and gains arising of a capital asset effected in the previous year shall be chargeable to tax under the head capital gain and shall be deemed to have been the income of the previous year in which the transfer takes place. There is no denying of the fact that in this year transfer is there and I have received 2 crores of rupees and I offered it for tax.
You are accepting the transfer?
Yes, because the shares are transferred and the
You are noting down that statement from
Yes, Your Honor. Yes, Your Honor. Because the shares have been transferred and shares, once it goes to demat account, even it goes to my broker's demat account, these courts have, tribunals have held, it is a transfer. I am not denying that fact. Now the issue is whether the consideration, as I have read out, whether it has arisen to me, whether consideration has accrued to me. See, this is an accrual of capital gain on consideration which is receivable in future. I may receive, it is based on the future profit. If there are losses, I may not get that consideration. I have taken a business risk. I was in the dire need of money, so I accepted 2 crores and looking to the time is I said, okay, even if in future I receive, I may not receive, I have accepted that if profits are there, then you pay me in the subsequent 3 years.
Subsequent year, what will happen?
Subsequent years, I have not. In the subsequent years, I have not received that amount. So, so the
brother has received.
Sorry. No, it is
Your brother.
No, that is. No, that's a second case, Your Honor. I will come to that case when we come to that case.
Okay, can you enlighten the bench about what happened subsequently?
Sorry.
Can you enlighten the bench what happened subsequently?
In the subsequent year, it cannot be. Your Honor, you have to see when the
That's not the fact, but the assessor received any further amount.
If he has received, that is the second case, Your Honor. First, let
No,
me.
even in this case, Sharmaji, he has received the amount.
Yeah.
It is sanctioned.
But then in the subsequent year is received, but the short question as I was saying was whether I have right to receive, whether I can enforce the liability against that person. And after when the word is arising, after it accrues, then it should arise to me. So in this case, as far as only 2 crore has arisen to me, and therefore only 2 crores can be taxed. Friends,
can you tell the bench whether the amount which is received in the subsequent year has been taxed?
Yeah, it has been taxed in the subsequent year.
The subsequent it has been
Yeah,
taxed.
yes, yes.
And what?
Yeah, it has been taxed. I have offered as capital gain only.
It has been assessed? It has been assessed?
Yes, it has been assessed also. Your Honor, there can be income. If the income is there, if it is not there, then there cannot be a tax. That is what has been held in the Surji Vallabhdas 46 idea. Then it is assumed I will rely again, which has